Up first here, PayPal looks to embrace all possible crypto and blockchain services. PayPal is working hard to integrate blockchain and cryptocurrency into its services, according to a senior executive at the company. This move would allow PayPal to provide even more innovative and convenient payment solutions to its customers. At the World Economic Forum on May 23rd, PayPal's Vice President Richard Nash said that the company is working hard to support all digital services, including digital currencies and central bank digital currencies. Nash emphasized that PayPal is committed to providing innovative payment solutions that meet the ever-changing needs of its customers. After PayPal rolled out its buy, hold, and sell service for Bitcoin across the United States in 2020, the company is continuing to expand its digital currency-related offerings. Nash emphasizes that they are taking a gradual approach to cryptocurrency buys and holds in specific areas. They are looking to partner with others to make the most of current opportunities with coins in PayPal digital wallets, private digital currencies, and central bank digital currencies down the line. Nash also hinted that he is a cryptocurrency owner, which is in line with his position at PayPal. When asked whether he holds any crypto himself, the VP answered that he likes to experience services for himself, so it is natural that he would own some cryptocurrency. Smart way to say that you own crypto without hopefully any backlash. As Cointelegraph previously reported, PayPal CEO Dan Schulman disclosed in November 2019 that Bitcoin was the only cryptocurrency he holds. PayPal is a leading payment company that has moved into the crypto and blockchain space in recent years. The company offers BTC buying and selling options in select countries. PayPal has announced its own crypto checkout service to allow merchants to accept crypto payments. PayPal is also considering launching its own stablecoin called PayPal Coin. That's pretty interesting. I think PayPal has done a great job at remaining relevant. You know, they've been around for a long time and they continue to adapt and change with the market, which in this market it changes so fast, you really have to do that. So if you guys utilize PayPal and utilize crypto, that's good news for you. Up next here, Avalanche nears key breakdown level that could sink Avax price by another 65%. Good news or bad news if you're holding Avax, depending on how you look at it. Avax's price is moving towards the pennant's apex, which is the point where the upper and lower trend lines converge. If the price breaks out of the pennant to the downside, it could fall by as much as the height of the previous downtrend. The Avax USD pair is expected to fall to $11.50 by June 2022, about 65% from today's price as shown below. However, Avax may not reach its desired price of $11.50 due to key support areas. For example, the Avalanche token's volume profile suggests that it is most often traded near its point of control, around $32. The level was instrumental in capping Avax's downside attempts in the August to September 2021 session and precede a 390% bull run, which saw Avax reaching its record high of around $150 in late November 2021. The POC level acted as a median during the consolidation trend seen between January and May of 2021 and now serves as a price floor as Avax eyes the bear pennant breakdown as shown in the chart. Meanwhile, creating a Fibonacci retracement graph from Avax's $2.75 swing low to $97.50 swing high shows that it is consolidating between its 0.618 fib line near $40 and 0.786 fib line around $23 as shown in the chart. A potential rebound in price towards $40 could invalidate the bear pennant setup currently in play. Avalanche's price is down 78% from its record high due to bearish sentiment in the crypto market and higher interest rates. The recent Terra ecosystem meltdown has also contributed to lower prices for Avax and other cryptocurrencies. If the trends of Avalanche and Bitcoin continue, the worst is yet to come. The correlation coefficient between Avalanche and NASDAQ was 0.91 on May 23rd, showing that their movements have been almost perfectly in sync. On the bright side, Avax could see an upside scenario in the short term, with its rising relative strength index diverging from falling prices, according to Scott Melker, an independent market analyst. So take that with a grain of salt. Possible short-term gains, long-term downtrend. That's just kind of how the market is. We think it's going to last probably another 6 months, hopefully not any longer than that. But up next here, Ripple CEO reveals he visited SEC several times before the lawsuit struck. Brad Garlinghouse, the CEO of Ripple, a company that facilitates cross-border payments, spoke during a panel discussion at the World Economic Forum in Davos, Switzerland on Monday. Garlinghouse, who also sits on the company's board of directors, spoke about a wide range of topics, most notably the current state of regulation in the United States compared to G20 countries. According to Garlinghouse, it is essential to have regulatory frameworks in place which uphold clarity and certainty. Without such guidelines, it is difficult for those within the crypto industry to act in a beneficial way. Here's a picture of them. Most people working in crypto are good actors that want to follow the rules, but when the rules are not clear, it becomes much more difficult to do so. During the conversation, Garlinghouse revealed that he had personally gone to the U.S. Securities and Exchange Commission office 4 or 5 times in the years leading up to their decision to file a lawsuit against Ripple. He stated that there is no justification for why the Ripple associated asset XRP should be legally categorized as a security. Garlinghouse argued that the United States is out of step with the G20 when it comes to regulating technological innovation. He cites Switzerland, Singapore, the United Kingdom, and Japan as examples of nations with more favorable regulatory environments. So that's interesting that he visited the SEC. I'm assuming to try to get some of this resolved before the lawsuit broke out, but I mean, he's not wrong. The U.S. has a long way to go in a lot of areas. Despite how far the country is compared to others, like, we have a long way to go. So I hope that this is wrapped up soon. Up next here, Doen Wan shares Luna burn address, but warns lunatics against using it. Doen Wan, the founder and CEO of Terraform Labs, recently announced a revival plan for Terra and Terra USD. The plan involves a hard fork, which has received mixed reactions from the community. Some have questioned the effectiveness of this approach, while others have recommended burning Luna as the most plausible way to achieve a comeback. Quant's proposal to preserve the Terra ecosystem would involve hard forking the existing Terra blockchain without the algorithmic stablecoin and redistributing a new version of the Luna tokens to investors based on a historical snapshot taken before the death spiral began. However, some crypto entrepreneurs, including Changpeng CZ Zhao, believe that this would be unfair to those who tried to rescue the coin, and that the supply should be reduced via burning rather than by forking at an old date. Quan initially planned to keep the burn address for Luna private, but after receiving many requests from the crypto community, he decided to make it public. Any Luna tokens sent to this address will be immediately burned, reducing the total supply of Luna tokens. So here he tweets out about that. He put the wallet address there. So if you're interested, then there you go. Quan shared the Luna burn address 2 days ago and reiterated that reducing the circulation supply of Luna tokens will not have an impact on the market price. He stated that the only thing that happens when you burn tokens is that you lose them. The Terra co-founder explained that the burn address was shared with users only for information purposes and warned against using it unless they knew what they were doing. However, the revelation has caused more confusion among investors. As Cointelegraph previously reported, the volatile nature of Luna provides a great opportunity for investors to make money, as they can either recoup their losses or make profitable trades. Quan has previously confirmed that Terra is no longer minting new Luna. This is one of the main reasons why investors believe a burning mechanism will improve Luna's price due to scarcity. However, the roadmap for a resolution is unclear, so investors are advised to refrain from making any sudden financial decisions while the master plan for the Terra revival continues to be under public scrutiny. After Terra's collapse, many projects sought to move to different blockchain ecosystems to stay alive. Near Foundation recently added Tracer, a Web3 fitness and lifestyle app, to its portfolio. Nikki Chalabi of the Near Foundation highlighted the alignment of projects like Tracer with the core values of the ecosystem, saying that they must watch the interests of their community and users because, in the end, that's the most valuable thing they have. Absolutely. You know, you want to stay relevant. You want to make sure you're giving the community what they want and what they're interested in and what they're going to utilize, especially in this market. Chalabi advised Terra projects to migrate only after carefully considering the interests of their users and communities, as this can actually define the success. So just some information, keeping you guys up to date on the Terra collapse, as we said we would. And up next here, venture funding for African crypto startups grew 11 times in 2022. More venture funding flowed into Africa in 2022's first quarter compared to the first quarter of 2021, according to a new report by blockchain investment firm Crypto Valley Venture Capital, CVVC, and Standard Bank. This increase can be attributed to the region's continued adoption of crypto and blockchain technologies. According to the African Blockchain Report 2021, blockchain startups raised $91 million in the first quarter of 2022, a 1,668% year-on-year increase. This is compared to the first quarter of 2021, which showed a year-on-year increase of 149%. Additionally, the report also indicated that while Africa has not yet observed a blockchain mega deal, it is estimated that within the next 2 to 3 years, unicorns may develop from the region's crypto and blockchain sector as more venture capitalists display interest in the area. Gideon Greaves, managing director for Africa at CVVC, told Cointelegraph that blockchain funding in Africa surpassed the other forms of startup funding. Greaves, whose venture capital firm focuses on investing in blockchain projects, noted that the region has an opportunity to enter markets faster through blockchain. Greaves went on to say that the lack of legacy infrastructure in the region actually gives blockchain startups an advantage. They have the opportunity to fill in the void with fast and innovative technologies. So here's a chart, which countries successfully raised the most capital in 2021, and here's a breakdown of the different countries in Africa. Nigeria had the most at 39.05%. Africa has the potential to become a leading region for blockchain-based businesses within the next 5 years, according to Greaves. The continent is equipped with the necessary tools and motivation to create large companies that can serve millions of people. Meanwhile, a group of venture capital firms recently invested $23 million to launch a new crypto exchange platform called Mara. The exchange is designed to provide a simple way to trade crypto and will initially commence operations within Kenya and Nigeria. A report released last month showed that the lack of financial services infrastructure in Nigeria has led to an increase in crypto ownership in the country. The study also showed that Nigerian citizens have started using crypto as an alternative way to store and transfer assets. So, that's pretty good news. It's very encouraging to see that no matter what the country's infrastructure is, no matter what their prior banking or traditional finance experiences, that they can be successful in crypto. And last but not least here, Litecoin confidential transactions spook Korean exchanges. Korea's 2 largest cryptocurrency exchanges have issued investment warnings about Litecoin after the coin's recent upgrade to Mimblewimble. Mimblewimble is a privacy-focused protocol that makes it more difficult to track transactions on the blockchain. BitHum and Upbit, which together account for a large portion of trading volume in South Korea, have released statements advising investors of the risk associated with the privacy-enhancing upgrade to Litecoin. This upgrade, which uses Mimblewimble to create confidential transactions, allows users to send tokens while keeping transactions data hidden. Upbit released a similar statement alongside BitHum's. The references to Korea's Act on the Reporting and Use of Specific Financial Transaction Information serve to highlight the need for crypto exchanges to implement Know Your Customer and anti-money laundering systems. Korean exchanges have a history of delisting cryptocurrencies after issuing warnings. The other 2 major South Korean exchanges, Corebit and Coin One, have not yet made any statements. Cointelegraph here tweeted out, "You're a wizard, Harry. Mimblewimble is not just a tongue-tying spell, but used in the magical series, but it's also a privacy-oriented, decentralized protocol that structures and stores transactions on the blockchain." There's their take on it. The Mimblewimble upgrade was first proposed almost 2.5 years ago. The new upgrade was released earlier this year after a majority of nodes approved the Mimblewimble update and will be able to interact with new MWEB privacy features. It was completed at Litecoin's block height of 2 million. The Mimblewimble Litecoin upgrade is one of the most eagerly anticipated updates for cryptocurrency. It not only adds new privacy features for users, but also incorporates key performance improvements to the blockchain. By compressing unnecessary transaction data, MWEB allows for discrete transactions on the Litecoin blockchain. Litecoin was one of the earliest cryptocurrencies to compete with Bitcoin, launching in 2011. It is currently the 18th most valuable cryptocurrency, according to CoinMarketCap, with a market cap of over $5 billion. So something to note, just if you're, utilizing Litecoin, invested in it at all, something to note, this may or may not affect the price down the line. That's all we have for you today. Thank you so much for watching. Make sure to like, subscribe, hit that notification bell, leave a comment on what you want to see in a future video, and we'll see you next time.